Good morning, everyone. Today is Monday, the 6th of Feb, and today I'm joined with Joe.
Good morning, everybody.
All right, just having a very quick look at the All Ords this morning. Nice to see us creep over the 7,750 level on Friday, and it's clearly just hanging around this today. Let's just, I guess, hope that it hangs around this level for a while, which would be very nice indeed. So possibly a week of blah, which would be nice. Just to get some support and a bit of consolidation. Okay, just quickly want to touch on the few stocks. There's a bit of some of the stocks aren't performing. It is a bit of an ouchy day if you're in the lower end of the market. There's just a couple that I'm keeping an eye on just because I really like these setups, and these are the sorts of things that we like to keep an eye on. Grange Resources, this has just been moving in a nice little sideways channel for a while, since, let's say, what was that, 20th of Jan. This is just nice. OBV looks like it's dropping off a bit, but really the volume is, you could say that it's staying a bit steady. It'd be nice to see it move between this $1 level up to $1.08 for another week or so, and then pop up above this level again for the next run. So I like that's just a nice sideways move that we always look for, again looking for a perfect trade. And DCC, this is sort of back in the penny stocks, but it's doing very much the same thing. You could do the same, draw a box around this and just hope, and just watch it, see if it stays in this level and wait for the break above the box. Gives you nice little tight stops. It's just a really lovely setup. Volumes dropping off, OBV staying solid. So all the sorts of things that we like to look out for. Right, do we have any questions today?
Yeah, we do. Just based off the video, the last video Frank did about the $300 stock, which I may or may not be able to afford. The question is, why wouldn't Frank buy it? And obviously percentages are percentages, but I think it does come back to your own personal preference. But did you want to cover that for us, Kylie, in more detail?
Yeah, look, to be honest, it totally is up to the individual and what your trading plan says and how much you're willing to put into a stock. To say not to buy whatever, that's not up to us. You need to make that decision. The reason that our philosophy basically is that this is over $300 stock. It needs to do a lot to get a decent return on it. However, if you're looking to put some money in for the next 50 years or whatever, go for it. When you look at this on a monthly chart, I mean, the chart in a technical analyst point of view looks great. You had entries down here, you had entries here, and then you've seen this real growth, and now it really is moving in a very solid sideways consolidation. If it could break this $320 level or even the $350 and be on its way again, and in 10 years it cracks the $600 or $700 and you've doubled your money, which is great. It could break down below here, in which case you'd have a stop. But you trade this on as a normal, we trade it as a normal TA sort of stock. Just for us, it's expensive. You'd get 30, say you had $10,000, you bought it at $305, you'd get 33 of them. So for 33 shares, you're buying it at sort of around $300. It reaches $350, you've made $500. If you were to buy a lower end, say even BHP, at $50 at the moment, I think it's a bit less than $50, but you'd get sort of more 200, and you'd get more return from even a $50 stock than a 300. That's just our philosophy. That's just how we would look at it, but it doesn't mean that the stock's not going to keep going. My doctor has great delight in telling me every time I see him, because he knows that I'm in stocks, that he bought them at the float and he still holds them, and he will never sell them. His kids will inherit it. His grandkids will then inherit it. So that's just the doctor philosophy.
There's really no fun in that for him, except for gloating rights.
That's right, yeah. He has a great deal of pleasure in telling me all about it every time. So I hope that sort of answers your question. There is no right or wrong. It's just our way of looking at it that we'd find better probably for us for returns, better stocks out there. Which brings me to another point, that if you were wanting to get in some of these bigger stocks, there are the ETFs, which I'm sure everyone's heard about. There's a couple out there that actually have quite a big holding of CSL in them. One of them is WiMax. It has, I think, 12 point something % allocation of WiMax in them. These are currently $7.82 a share. So, and this basically is the 12 largest blue chip shares. That's what it looks at. So if you want to have a look, that's a better share ETF. So this basically this includes all the big blue chip shares on the ASX. Like I said, which includes CSL. So if you're not wanting to spend $300 but you want to have a piece of CSL, there's WiMax. Gear is another one. This is a leveraged stock. It follows the ASX index, and again, there's a percentage of CSL in this stock, in this ETF as well. So there's different ways you can look at getting into CSL without spending $300 on a share. ILC is another one, and VLC is another one. Both of these have approximately 10% allocation of CSL in them. So there's just a couple of ideas of maybe spreading your portfolio a bit, which includes other stocks as well. Yeah, so that's it.
Excellent.
All right. Well, thanks, everyone. Thanks for the questions. Keep them coming in. You'll also probably notice that we're sending out details now regarding our overseas conference, which is happening in June, and we're off to Ho Chi Minh in Vietnam.
Yes, in Vietnam. Yes.
So if you're interested, please let Jo know.
Yeah, so just register your interest at this stage to me, jo@protrader.com.au. We're busy finalising costs now, so it won't be long till we have the actual prices out, but we can get more information out to you as it comes to hand if you register.
Thank you. We'll talk to you tomorrow.
Thanks, bye.